The story begins at the break of dawn, when the world was about to witness a seismic shift in global trade. With a single decision, shockwaves rippled across continents, shaking the foundations of international commerce and diplomacy. The Trump administration, determined to reshape America's economic future, launched a trade war with China, wielding tariffs as its primary weapon of choice. The U.S. imposed heavy taxes on hundreds of billions of dollars worth of Chinese imports. China retaliated in kind, targeting American goods. This tit-for-tat escalation created chaos for international businesses, sending markets into turmoil and leaving executives scrambling for answers. Boeing, America's largest manufacturing exporter and a symbol of U.S. industrial might, was suddenly at the center of the storm. Its business model relies on selling advanced aircraft worldwide, with China as a crucial and rapidly growing market. The tariffs put this vital relationship in jeopardy, threatening billions in revenue and years of carefully built trust. Boeing planes built for Chinese airlines were grounded, unable to be delivered not because of safety concerns, but because of politics and international brinkmanship. The Chinese government made it clear, American aircraft were now bargaining chips in a much larger game. Assembly lines kept moving, but finished planes sat idle, creating a logistical and financial nightmare for the company and its workers. This grounding became a powerful symbol of the trade war's real-world impact, a visible reminder of how politics can halt progress. Political decisions in Washington now directly affected American workers and industries, from the highest boardrooms to the factory floor. The conflict was no longer abstract, it was visible in gleaming jets stuck on U.S. soil, waiting for a resolution that seemed out of reach. For Boeing, this meant frozen assets, mounting uncertainty, and a growing sense of vulnerability. The company was forced to navigate a crisis entirely outside its control, relying on hope and resilience as much as strategy. The trade war's consequences rippled from boardrooms to factory floors, affecting livelihoods and futures across the nation. Boeing's future was suddenly hostage to the ambitions and negotiations of two global superpowers, its fate hanging in the balance. The situation set the stage for a period of intense struggle and uncertainty as everyone waited for the next move. The company's fate now depended on forces far beyond its engineering expertise, on politics, diplomacy, and the unpredictable tides of global power. The world watched as one of America's giants was grounded by geopolitics, its future uncertain, its story far from over. After months of complete paralysis, when Boeing jets sat idle and hopes for progress seemed to fade, a single Boeing 787 Dreamliner was finally delivered to Juneyao Air in China, breaking the long silence. This wasn't just a routine business transaction, it was a highly symbolic gesture. A signal of a possible thaw in tense U.S.-China relations that had been frozen for so long. For Boeing, it meant hope. Dozens of planes built specifically for Chinese airlines could finally move, unlocking hundreds of millions in frozen revenue and easing a growing financial strain. Airlines pay most of a plane's price at delivery, so each undelivered jet was a financial anchor, weighing down Boeing's balance sheet and creating anxiety for the company's future. Soon, other aircraft movements were spotted at airports, hinting at a cautious, tentative reopening of the delivery pipeline between the two countries. The global aviation industry watched closely, aware that the situation could reverse at any moment, and that every step forward was fragile. The resumption wasn't the result of a formal deal, just a temporary truce, a pause in a much larger dispute. Tariffs remained firmly in place, and the core issues between the US and China were still unresolved, casting a shadow over every delivery. The flow of planes could stop again without warning, with a single political decision or diplomatic setback. For Boeing, every delivery was a lifeline, a small victory in a sea of uncertainty, but the underlying anxiety persisted. The company and its investors remained on edge, knowing that the fragile progress could vanish overnight, and that fortunes could change in an instant. The broader trade conflict still loomed large, threatening to shut the door again and disrupt the delicate balance. For now, hope was measured in single flights, not sweeping agreements or grand gestures, each takeoff a small sign of progress. The future of Boeing's most important market remained uncertain, with every new day bringing both risk and the faint possibility of renewed cooperation. The trade war hit Boeing's finances hard, sending shockwaves through the company's operations and future plans. China's retaliatory tariffs made Boeing planes far more expensive for Chinese airlines, instantly raising costs and making deals less attractive. This gave Airbus, Boeing's European rival, a major advantage as their planes suddenly became the more affordable and practical choice. Chinese carriers had every reason to buy from Airbus instead, shifting their loyalty and business away from Boeing. Boeing's sales and revenue in China plummeted, threatening its long-term health and putting pressure on its global market share. Completed jets built for China sat in storage, becoming costly whitetails with no buyers, tying up valuable resources and capital. The financial strain was clear, cash flow dried up and new orders stalled, forcing Boeing to make tough decisions about production and staffing. Even when Boeing's other business improved, the China problem cast a long shadow, limiting recovery and growth opportunities. Investors and analysts grew wary, knowing the company's future was tied to unpredictable politics and global trade tensions. The tariffs created a dual crisis, delayed payments for finished planes and a collapse in new orders, leaving Boeing in a precarious position. Why would Chinese airlines commit to buying planes under threat of tariffs, when uncertainty made every deal risky? Boeing was left struggling to get paid for work already done, while its future business evaporated and relationships with key customers suffered. The trade war turned a growth market into a financial minefield, erasing years of progress and opportunity almost overnight. Boeing's bottom line was now at the mercy of international politics, with its fate hanging in the balance as trade tensions continued. Boeing's investors faced a storm of uncertainty. The trade war made it impossible to predict future earnings. Wall Street watched every development, anxious about the impact on sales and profits. Images of undelivered jets shook confidence in Boeing's stability. The lack of a clear resolution to the US-China dispute added risk for shareholders. Every bit of good news was overshadowed by the threat of new tariffs. Investors struggled to make long-term decisions, knowing Boeing's fate was tied to geopolitics. Internal crises like the 737 MAX safety scandal only deepened the anxiety. The combination of external and internal problems created a perfect storm. Boeing stock became a barometer for diplomatic tensions, rising and falling with every rumor. Investors were forced to bet on political outcomes, not just business fundamentals. This volatility left Boeing in a precarious position. The trade war had turned corporate America into a pawn in a high-stakes political game. China isn't just another customer, it's the key to Boeing's future. Experts predict China will soon be the world's largest aviation market. Its growing middle class means soaring demand for new planes. For Boeing, losing access to China would be catastrophic. Tariffs made American planes more expensive, pushing Chinese airlines toward Airbus. The trade war threatens to permanently reshape the global aviation landscape. Boeing's market share and profitability are at risk in this vital region. Despite political friction, demand for aircraft in China remains strong, but delivery delays create financial strain and chaos for Boeing. The company's ability to do business in China is now hostage to US-China politics. Boeing must balance relationships with both governments, walking a diplomatic tightrope. Investments in China, like local finishing plants, can be undone by a single political decision. In today's global economy, business success depends on navigating international relations as much as building great products. Boeing's future hinges on more than engineering. It's about surviving in a world shaped by geopolitics. Boeing's troubles are part of a much larger US-China conflict. The dispute spans technology, intellectual property, and critical resources like rare earth minerals. This broader battle creates a hostile environment for dozens of industries. Other nations are pressured to pick sides, threatening global supply chains. The conflict is no longer just bilateral, it could destabilize economic relationships worldwide. Resolving Boeing's issues depends on progress in much bigger negotiations. Meanwhile, China is accelerating efforts to reduce reliance on Western technology. The trade war is fueling China's push to develop its own aircraft industry. What began as protectionism could create a powerful new global competitor. The unintended consequence, a more formidable rival for Boeing on the world stage. As Boeing battled the trade war, it faced a crisis at home. The 737 MAX safety scandal shattered its reputation and led to a global grounding. Leadership changes and internal restructuring followed, all while tariffs squeezed finances. The company had to rebuild trust with airlines, passengers, and investors. Managing internal recovery and external threats created immense pressure. The safety crisis raised questions about Boeing's priorities. Had profit trumped engineering? Recovery now meant transforming its culture, not just fixing technical problems. Boeing's future depended on addressing deep internal issues as much as external politics. The path forward was more complicated than ever. The tentative resumption of Boeing deliveries to China offers a glimmer of hope. It shows that business ties can survive even amid political hostility. But the outlook remains uncertain. Tariffs and tensions still threaten the industry. A stable partnership requires a comprehensive trade agreement between the US and China. Without it, aviation remains vulnerable to sudden policy shifts. Both countries have strong incentives to cooperate. China needs planes, the US needs the market. The challenge is for leaders to prioritize long-term benefits over short-term politics. The future of global aviation depends on it. The trade war poses lasting risks for Boeing and American aviation. Persistent tariffs could permanently shift Chinese airlines to Airbus and local competitors. The dispute accelerates China's push to build its own planes, like the Comac C919. Ironically, US policy may be speeding up the rise of a new rival. The industry's future is clouded by geopolitical uncertainty. Some hope business logic will prevail, but the damage from delays and tariffs is real. The story of Boeing's grounded jets is a warning global business is inseparable from politics. The stability of aviation depends on diplomatic solutions, not just engineering. If tensions persist, the market could fracture into competing blocks, less efficient, more costly, and less safe. The path of economic confrontation is perilous, risking turbulence for the entire global economy.